Today's topic is about identifying trends. When you buy real estate, people look for location. That is the key. When you buy stocks, you should be looking for the trend. Can you see the trend? Where do you think you are on the trend line? This is very important. When you try to look at the trend, you must have certain requirements. First of all, you need to have some business and economic common sense. And you need to know what makes the stock market tick. If you have viewed some of my videos, you should have known by now what makes the market tick. It's just a lot of cash to buy and a lot of stocks to sell. Who possess this kind of power? You need to have an open mind, use your observation technique, and very important, use your reasoning power. Learn from the present and the past when you see things happening, and also look out to the future, because the future is full of surprises for you, especially in the stock market. There's no need for technical details, because technical details, most of the time, they confuse you more than they help you. Now, let's look at the trends. There are three basic trends. Remember, the price of a stock moves like the waltz of the tango. You dance with it, but you have to know where does that dance take you. Otherwise, you cannot get out with a profit. So let's take a look at the three basic trends. And basically, they are uptrend, downtrend, very simple, and seesaw. Seesaw means no trend. So what is uptrend? Uptrend means it starts out here and it winds up at a high. And no matter where it goes, it winds up from a low to a high. So it goes like so it winds up there. This kind of pattern you can see all the time, within a day, within a week, within a year. So it all depends on what kind of time frame you are interested in. If you plan to play the stock for one day, then you have to make sure that the day trend is this one. If you play it for a month, it has to be this one, or a year, it has to be this one. Otherwise, it's very hard for you to get out alive. Now, we come to the downtrend. It's just the opposite. You start from a high, and you come down to a lower point. Always the same. Now we come to a seesaw. A seesaw has two endpoints, A and B. And you notice that A and B is more or less similar in level. So a seesaw means you cannot tell a trend because it doesn't wind up being higher or lower, maybe a little bit. And you see a lot of ups and downs in between, and also sometimes it pauses for a little while, like the pauses here. But still, there's no change at the end point, so you cannot tell that it's an uptrend or a downtrend. Nature of trends. Very simple. Trend is about time. It's about the past, the present, and the future. And for any kind of trend, you have to pick your own time frame. Do you want to view it during just a day, or a week, or a month, or within a year? And for the stock market, this is your purpose of playing the stock market. Do you want to play within a daily basis or within a month or a yearly basis? It's up to you. This is for you to decide. The last part is predicting the future. When you predict the future, you know that there are a lot of known factors, but let me assure you, there are plenty of unknowns that you don't even know about. So it's not easy. But when you predict the future, one thing you must be sure. You must be sure that the company is not dying. So the company's survival is not an issue. Otherwise, there's no need to predict. Because if the company is dying, the stock price is always near zero. So you can forget about looking for the trend. And when you're predicting the trend, you need to know how big the company is, its size, outstanding shares, and the kind of dividends that they pay. You have to know the nature of business. This is very important. What kind of business that the company is engaged in, and what is the business relationship to the economy. You have to find out where are the previous peaks and bottoms so that you know where you are. News, well, we know that every day the news can trigger an up or down movement, but all news are only temporary, and most of the time they are misleading. When you hear some news, when you read some news, you have to read between the lines, because the fundamentals are the very important things that will drive the stock price. It's not just the news. If you want to predict what's going to happen within a short time, a week or so, all you need is look at the volume of options that are due to expire, the short sales that have been made, and the limit orders that have been placed. As a small player, we don't have those data. Only your brokerage companies have, but they're not going to share it with you. They will share the data among themselves. So this is the kind of weapon that small guys don't have. Lastly, we come to the most complex factors. So it's a combination of a lot of things, such as the competition. How is the company doing in the face of competition? Pricing. Can it get a good price for its products so that it can make a lot of money? What is its market share? Is it losing or gaining market share? How the management of the company deal with the problems, and so on, so forth. All of these we can hear or read from the reports. That's what small guys do. They read the reports about all the complicated things that can affect the price movements. However, do you think that the big guys do the same? The big guys don't have to read the reports. They just get the data from the top executives of the company. That is what we call insider information. They usually get this kind of information a few months ahead of time.